Thank you everyone for joining to what I believe is going to be one of the most exciting sessions that we're going to have for the entire day, about a topic that is very much impactful already today. A topic that fundamentally changes the way we transact, we interact, and we govern relationships. It's about the crypto economy, and we have assembled an all-star panel today that will give their views on the crypto economy adoption from many different angles, from many different industries. So my name is Pierre Samaties. I'm a partner at Roland Berger. I'm leading our global crypto economy team. And I have the pleasure to be your host for the next 50 minutes and introducing this wonderful panel to you. But before we do that, before we go into the introduction, bear with me 1 minute because I think the topic needs a bit of framing. Because crypto economy on the one side is something very exciting, but on the other side is something that's very much misunderstood most of the time. So when we talk about crypto economy, we fundamentally mean the innovation that's coming from cryptography and decentralized ledger applications and everything that's built on top, from NFTs to smart contracts and so on, and its impact on every value chain in every sector that we can think of. And that goes from the future of finance, classic CeFi, DeFi, digital asset management, to asset tokenization, which is going to change fundamentally the way we manage, fund, trade assets that also previously have been illiquid. It's about the rise of the metaverse. Why that? Because crypto economy is the heart and soul of the metaverse. It's about supply chain efficiency. How do we make supply chains more efficient, more counterfeit protection? How do we prepare supply chains for machine-to-machine economy? It is about Web3 and the data economy, and that would have been a panel on its own, given the size of the topic, which is about the shift from our platform-based web to our network-based web, and the ability to demonopolize the web infrastructure that we have today. It is about crypto mining and staking, not only as a profitable business model, but really as a strategic investment into a future of an industry-changing protocol. And lastly, it's all about digital identity, because none of the crypto economy elements would scale if we don't have a self-sovereign digital identity that would allow everyone that's playing in there to identify at least some credentials of their counterparties. Having said that, the title of our panel is a bit provocative in the sense that we ask, if you don't join the crypto economy, will you become irrelevant? And as mentioned, we have an all-star panel today. I would like to introduce them to you, and please give a big hand of applause to them as well. So we have Benjamin Ampen, the MD of Kraken, Middle East and North Africa. Kraken, one of the largest exchanges and most trusted exchanges in the space. We have Faisal Al-Hammadi from Further Ventures. And Faisal, if I might say so, also one of the masterminds behind Abu Dhabi's crypto economy entrance. Fardad, Zand, CEO and co-founder of Wisdomize, a very innovative startup that is utilizing AI technology and digital assets to democratize wealth management. Welcome, Fardad. Naveed, Tariq from E.On, taking care about innovation and strategy. E.On is one of the largest European energy companies, so really interesting to hear their perspective on entrance in the crypto economy. Welcome, Naveed. And last, but for sure not least, Douglas Greenig from CEO of FC Capital, one of the prominent quant asset managers in the space that is coming from TradFi, and there's a very interesting perspective on why Florin Capital now moves into the digital asset space as well. Welcome, Douglas. Great, so let me start with my first question, and that's going to be a question that's similar for all of you. So maybe you can share with the audience, how are you involved in the crypto economy, and out of the 7 trends that I described in the beginning, which are the ones that you're most excited about? Benjamin, if we can start with you.
Thank you, Pierre, and thank you, everyone. I'm very, very happy to be here. In the previous life, when I came to FII, I didn't see that many mentions of crypto and so much interest. So it's just showing all the progress that is happening. And maybe that's the first part of my question is, I'm extremely excited about how the space is developing. You know, crypto adoption, crypto development is increasing like crazy. When we have a look at the latest number from chain analysis, in Saudi in particular, when you compare 2 periods, July 20 to June 21 and then the same the year after, we're basically looking at a volume increase of transaction in crypto by 195%. This is in Saudi only. And MENA as a region, which is my remit for Kraken, now MENA represents 9.2% of the full transaction of crypto assets in the world. So that is the first thing, is it's not just hype. The increase of adoption is definitely happening. Something else that is pretty exciting, I think, in the space is seeing all the work that is happening, in particular in this region, around regulation and institutional investment. When you see a couple of years ago, the project that was mentioned a couple of times in this conference already, Project Aber, that was a collaboration between the Central Bank of the UAE and SAMA, the Central Bank of Saudi, where it was a first foray into CBDCs, so central bank digital currencies, and the adoption of blockchain, just to have a look at cross-border payment system. So you see here really a thirst for innovation and trying to develop the space. And the last thing I'd say, something that particularly excites me, and to quote you about your trends, the future of finance. When you see mainstream finance adopting and trying to adapt to crypto, this is exciting. And what I mean by that is, I'm sure you've heard recently the announcement between BlackRock and Coinbase. This partnership is massive because you have effectively the largest asset manager in the world that is leveraging blockchain technology and using the functionalities of a crypto exchange to give access to virtual assets to their clients. So when I see such things, from consumer to regulators, I didn't even mention FSRA and VARA in the UAE, but plenty of things to be happy about, to be hopeful, but a lot of work to do and a lot of education still to happen.
Yeah, thank you, Benjamin. Faisal, what's your view?
Hi, everyone. Pleasure to be here with you. With regards to adoption, I mean, I remember when my friends and I would share posts in a group once a month about some large institution starting to adopt crypto. Now I get messages every day, and that shows you kind of the how fast this technology is moving. With regards to trends, I mean, I'll give it the regional perspective. From our side, we still think that the foundations are missing today. So we're focused on building the picks and shovels of the industry as a first step. We know there's a lot of companies looking to move to the region, a lot of companies wanting to build things in the region, but they're missing basic things like the payment rails and custody. So these are the important elements we're focused on in the short term. In the medium term, we're looking at use cases such as tokenization. So we're kind of bullish on what's coming in that space in the context of carbon credits, real estate, and so forth. We're seeing some applications there, but we think scale will come over the next 3 years or so. And obviously, you know, in the space, you have to be creative and think long term about prospects. I've been hearing about things like machine-to-machine transactions and how that is able to optimize energy costs and so forth. So I think this is just the beginning, and we're excited to be building kind of the foundation today. We're excited about the short-term outlook, and we're very excited about the change that this industry could bring.
Great. Fardad, from a startup point of view.
Can you hear me?
Yeah.
Pleasure being with you guys. I think my journey in crypto has started 2015 when I got into crypto as a kind of casual trader. I had no idea how trading looked like without like a proper finance background. And then I can remember that I started with 10K, and then after 2 years, that ended up with a 7-figure asset. So that was for me the motivation to allow this opportunity to a broader group of people to actually participate into this broader kind of wealth creation opportunity, right? I mean, without maybe the minimum ticket size these days to go to any asset management company is what? Is 100K, is 200K. But then the idea was that how can we actually open this opportunity, which is evolving, called crypto market, to the broader group of people, so then they can actually participate, of course, in a smart way, in a profitable way, and it's actually a new vehicle for them to create wealth. Of course, there are so many challenges. I mean, the regulation, the security. We can talk about those topics. But I think Me seeing future of finance, DeFi, crypto market being in the hands of ordinary people in an effective way, I think that's what I expect. And then the mass adoption of crypto market is, of course, is an evolution. If you look at internet back in 1994, 1995, in the early days, it took us a couple of years before everyone had an email address, I think. And then we got into the e-commerce. Maybe Web 2 was about social media democratizing interaction. And Web 3 is about to bring democratizing value creation and value capture. Are we there? Not yet. What it takes to get there, I think there is a lot to happen over the next couple of years. But I believe without a kind of active wallet address in a couple of years, it sounds like not having an email address today.
Interesting, and we're going to get back to that point for sure. Naveed, from a utility point of view.
Yeah, so it's a very different from a utility point of view, the way we look at things. And let me put into context why I say that. We are a German utility out of North Rhine-Westphalia, quite a big in Europe footprint, 55 million customers. But we are quite conservative in what we do in terms of our business. And we manage critical infrastructure across Europe, so we have to be conservative because civilization of the Europe is running on this infrastructure at the end of the day, right? So me sitting in Riyadh and talking about now blockchain, it's a massive leap for this company. That's already says something about that. For this company to go beyond borders, that going to Netherlands was saying, oh, we are doing international business, which is 1 hour away, and now sitting in Riyadh talking about blockchain. But the fundamentals are still the same, and the fundamentals are, what does it do for my customers, where are the opportunities, and what problems do we solve? It's not about the technology, it's about what exactly we bring to the world. And the trends that you mentioned, and I think I would like to take one thing from that, and that is about sovereign identities is very important for us, because if you think about it, we have 55 million customers. That means we hold a 55 million KYC data of the customers. This is a very large database and very sensitive database that we hold. And on the other side, we spend each year a couple of billions euros on our infrastructure to our suppliers. So we pay and put out this money into the market to certain suppliers that we need to know who they are and where the money is going. So combine these two, the identity management is very expensive system for us, for our own usage and supply chain management and things like this. But if I use the identity management trend of the blockchain, there are opportunities we are seeing when it comes to KYC and also the fraud management and also tracking of everything, asset management and stuff like this. But there is another trend, maybe you have not mentioned it, it's about sustainability. Everybody talks about blockchain as not a very good example. I think that is a little bit misplaced impression. If you think empirically, it's a very different stand when it comes to the sustainability, but also, again, coming back, technology serving a certain purpose. And for us, when we talk about sustainability, we have thousands and thousands of miles of corridors of electricity cables. We take all the trees out, we destroy sometimes some of the flora and fauna, but then we put it back. Now we're maintaining all of that back. But to maintain all of these thousands and millions of kilometers worth of flora and fauna, accounting of that is massive. So corridor management through blockchain-based credit management and blockchain-based plot management is really simple. It simplifies the whole thing for us. So blockchain is actually kind of playing a role for our sustainability efforts as well. So yeah, it's a really company which is driven by the customer needs and opportunities. So blockchain and cryptography and crypto economics is simply a tool for us at the moment.
And that's amazing to hear. I mean, from a more traditional industry point of view, that we really already have adoption in that space as well. Douglas, from a TradFi point of view, what's your take on that?
Well, first I just want to say thank you. It's absolutely wonderful to be speaking here at this amazing event in such a dynamic country in the G20. And so And in some ways, maybe I almost feel like I don't belong here. As we go around this circle, we're getting more and more and more traditional. So I am indeed Mr. TradFi. I run a well-established, fairly large, systematic hedge fund that is invested in by institutional investors around the world. The kind of people like the New York City Police Pension Fund. And so we're very conservative, we're very careful, and what we do is we apply algorithms to the systematic trading of operationally difficult markets around the world, whether it's French electricity or onshore Chinese commodities or many other markets of this kind. And cryptocurrency fits in very naturally into this world. A lot of people don't appreciate that within crypto, there's a huge diversity among the coins and the tokens. There are differences in the consensus mechanisms. There are differences in the purpose. Some coins are for a specific ecosystem. And I think that differentiation will become more and more apparent over time. And one of the interesting things is that while crypto is changing the traditional economy, traditional folks are coming into crypto bringing some expertise and experience. Like, people who've been running hedge funds for a long time know how to run hedge funds. And we have some wonderful algorithms that have worked in hundreds of markets over decades. And they work very well in crypto. So we're trying to contribute something from the outside into the space. And, I think it's a very, very exciting space. And I think it is, I won't say become irrelevant, but you'll become less relevant over time if you're not engaged with it. And there will, of course, be a merge between the world of crypto, DeFi, Web3, and the rest of the world. It'll actually become kind of seamless, I suspect, in the end.
All right, interesting. So I think we now heard a lot of interesting perspective from different angles. Douglas, if I may stay with you for the next question, because I think that's a very important one. TradFi institutions going into crypto as an asset class is something obviously we see more and more, but the narrative of Bitcoin initially, of being that non-correlated assets, that's a hedge against inflation, that's a hedge against other market movements, is that true, or has it broken?
It's sort of true. One of the things that we struggle with in finance is an imprecision in the terms we use, the concepts that we have. Inflation is caused essentially by two things. On one side, there is excess liquidity, too much monetary expansion. On the other side, inflation can also be caused by supply shocks. In the end, it's a kind of balance between money or liquidity and stuff. Ray Dalio talked a little bit about one side of this. What Bitcoin hedges, and I know I'm going to sound like a Bitcoin maximalist here, but I'm just...
We need to have one on the panel, right? So.
but I want to kind of... What Bitcoin hedges very well is monetary expansion. It's less useful for dealing with supply shocks. For supply shocks, you want to own the commodities or trade trend on the commodities that may be in short supply. So let's go back. Go back to 2020 and 21. That's when you had the monetary and fiscal expansion. And Bitcoin took off like a rocket. I think the expression young folks use is to the moon. It really took off. And it went from 10,000 to I think it was 68,000 and change, just shy of 69,000. And when did it stop going up? The critical thing is when the central bankers started to sort of find their way. They began to realize that the monetary and fiscal expansion, which was a huge amount of stimulus, no one's ever seen anything like this, was too much. And so Chairman Powell started to act like he was channeling Paul Volcker. I'm going to stop this, and I'm going to stop this now. And so at that point, inflation swaps. Nobody can argue that inflation swaps aren't a great inflation hedge. What could be a better hedge than receiving CPI and paying fixed? They dropped, right? And Bitcoin dropped. Now, the thing that has confused the matter slightly, in my opinion, is when Bitcoin dropped as the central bank story turned in 2021, there was a deleveraging event. There was just too much leverage in the Bitcoin world. You know, Three Arrows and Celsius and Voyager, and in a way, Terra Luna is a kind of example of endogenous leverage. And so that leverage probably took Bitcoin from 35 or 40,000 all the way down to where it is now. But I think it's going to come back and come back pretty strong as soon as the Fed either stops, pauses, flinches, hesitates. I mean, we saw that a little bit in July when Powell started to, and we're seeing it a little bit right now. Actually, we saw it yesterday a little bit.
Yeah.
So my view is yes. If what you're trying to hedge, okay, Bitcoin was, I don't want to go on too long, but Bitcoin was born from a populist impulse. Fear of institutions, fear of the man. It's almost kind of an Occupy Wall Street mentality. But ironically, it's one of the great hedges against populism. If you define populism, as Ray Dalio did, or as I would, as spending money you don't have. If you spend money you don't have, you're going to have a monetary expansion sooner or later. You have it right away, or you can monetize the debt later. And so I think the use case is intact. And I think it's important to get that out there because I think it's wrong to say that Bitcoin does not have that use case.
Well, super interesting. Thanks for sharing that. And I think it's an underlinement of traditional finance really believing into the asset class. Obviously, not all of your colleagues, but it's getting stronger and stronger. Faisal, if I may come to you, you mentioned you're building the picks and shovels of the industry, and that goes a bit, I think, into a discussion around mass adoption. So what are these picks and shovels, and what do you think is important for mass adoption?
So we think that regulations are important. I know it's obvious, but here in the region, we're betting that we'll be able to launch businesses that are regulated, that provide custody, that provide the payment rails, to be able for this ecosystem to flourish. And we know that the governments are looking at how to adopt these changes as soon as possible. So that's why for us we think in the next year to 3 years that the government will come out with laws and regulations that will enable companies to not only be present in the UAE and trade crypto, but to go far down the value chain and be able to drive mass adoption. The other element are the merchants. So obviously merchants are quite important for adoption. A lot of them are trying to dabble in this space. But the issue today is volatility. And once you have regulations, volatility should decrease and merchants should start to adopt more. Mm-hmm. And that's when we think that mass adoption will come to the region. So those are two things that we're eyeing, regulations and what merchants are doing. And trying to time the market and to hope for the best.
Great, very interesting. Benjamin, with Kraken, you're in the middle of all of this adoption play. What's your view?
Yeah, so drivers or hurdles, it depends which way you're looking at them, right? I'll talk about regulation for sure. But the first one, at least as a crypto exchange, or at least a crypto platform representing Kraken, I think we just have to realize the full potential of crypto. The mission of Kraken is to accelerate the adoption of crypto, to give financial inclusion and financial independence to people. And looking at crypto as just an investment vehicle is actually pretty developed market mentality. There are a lot of countries in the world. You go to Argentina, you go to Lebanon, you don't need to convince the population, you don't need to explain them the basics of Bitcoin. So I think that's the first thing I'd say for mass adoption. I think it's really important to have a look at the whole promise of crypto. Now, when it comes to, because I know there are some investors in the room and we're still talking about the world of finance, for institutional investors, I think it's particularly important that we have best practices. So as crypto platform, we have a role to play to explain what are these best practices. Security and safety are crucial. And it links actually to your points about regulation. I think we really need to make sure that not only we offer something compelling to the markets that we're operating in, It cannot just be an add-on of a global platform. It really needs to answer like local needs, and that needs to be built on a robust regulatory framework. What we do at Kraken in the UAE for now is we are actually the only global crypto exchange that has a full financial regulation from the FSRA and ADGM, which means that we have an MTF license, multilateral trading facility, and custodian license. So that gives confidence to investors because we have a stamp of approval from a regulator that is recognized. And this is necessary to make sure that we drive adoption. So that's the thing I'm looking at when I think about drivers or hurdle. But at the end of the day, education is extremely important as well. Making sure that we demystify everything. Several years ago, when we talk about crypto, we're saying that Bitcoin was used only to buy drugs and weapons online. Well, this myth has been debunked pretty much. Around Bitcoin, there's a big conversation around environment. I don't think we should enter it right now because that would be more than a panel, but again, when you educate yourself, you realize that depending on how you look at the whole crypto industry, the concept of energy becomes different. It's not just mining to get one Bitcoin. It's mining for the promise of a whole economy where you don't spend more than you can save. So the time horizon here is also different.
Interesting. So, Naveed, you're probably out of the group with your target group at the forefront of bringing the concept of Web3 and crypto to people that are not at all familiar with it. If I look at like an average customer base, what's the takeaway from the work you've been doing on what's needed for adoption of bringing masses into what you mentioned, the Web3 digital identity wallet?
I think it's pretty simple. Don't talk about crypto to a customer. That's it. So what I mean to say is that I give you an example. We are starting a project, and we call it like, we are an energy company, and we have a huge amount of scope 1, 2, and 3 emission footprint. So we take it as a really enormous responsibility on our shoulders to decarbonize the world. And hence we are starting an initiative through which we will create a platform for trading, supply and demand of climate products. And that will be has a blockchain element in it. And you take it to another project in and we don't even talk, nobody knows about it, that there is a blockchain accounting going on in the back end. In the front end, it's a climate product. On the back end, we have another project going on, which is about making the digital world green or sustainable. And again, one of the architecture layer is blockchain there, but we do not talk about blockchain layer to the end customers. For example, if I'm going to talk to you about we are going to have a LinkedIn and I'm pitching you for LinkedIn, I do not talk about internet with you. I do not talk about mobile interface and HTTPS and all of that with you. I talk about customers, problem, business case, and how we're going to resolve and how we're going to make money out of it, LinkedIn, if I'm the owner of it. Same way, we talk about what we're going to do as an impact. The technology layers, if somebody's interested, we choose our platforms, we're going to talk about those things. So yeah, so the biggest lessons that we have learned is don't start the conversation with technology, start a conversation with what you need to deliver, why are you doing what you're doing? And otherwise, if you start a technology, then it's like, it's technology looking for a problem kind of a situation that you get in, and we shouldn't be doing that.
Interesting. I saw you grabbing the mic. You want to answer that?
Sorry. There's something that is really bugging me since the very beginning, and I have to express it. When Douglas said, as a representative of traditional finance, that it doesn't belong to this is not right. And it's not me trying to be inclusive at all. This is just that when we're talking about hurdles or driver for mass adoption, I really think that we have to look at crypto not in isolation. You really have to have a look at traditional fiat currencies and traditional assets with cryptocurrency together. Because when you think of investors, it's just about offering new opportunities, offering new options, right? So we increase the amount of choice. So I really think that for mass adoption, there's really need to be some sort of collaboration between traditional finance and decentralized finance, so that is the best option for the investors. I'm probably provoking you a bit here.
Oh, no, you're not provoking me. I made the comment in large part in jest, you know, so slight self-deprecation due to my age and the fact that I'm pretty tradfi. In reality, we've been trading crypto for 5 years as part of our program with considerable success in both bull and bear markets. And we're bringing to the market what we expect to be one of the first institutional grade things that a pension fund or a really conservative investor can feel comfortable with. Trading trend in the top 20 coins. So, but I have to acknowledge that I don't have a hair bun. Or I have this guy who works for me and on the program, and he definitely has that crypto edgy look that I lack, along with hair.
Interesting. For that, if we go to the main question of it, go into the crypto economy or become irrelevant. Now, you're working very much on a bottom-up kind of empowerment of people to go into crypto. How do you see that? Will certain industries become irrelevant if they don't go into the crypto economy?
Backing up Douglas, I think maybe becoming irrelevant is too harsh. But whether or not you would become less relevant, I think I would say yes, right? I mean, again, your crypto wallet address is becoming your identity. It's becoming actually one single point of interactions on the web over the next couple of years, right? So if you don't have that crypto wallet, you probably can't participate in many opportunities on web going forward, right? How long did it take to get there? Either a year, either 2 years, I don't know. But it's going to happen. The challenge, I think, with Web3 is the people who build Web3 in the first place, for whatever reason, they thought they need to go against Web2. So it was like Web2 versus Web3. It's not a fight, it's just a collaboration, right? There's so much that Web3 people and behind it, the community behind it can learn from Web2. It took us 25 years, over 25 years, to get here on World Wide Web and Web2. There's so many best practices built out there, right? And now reinventing the wheel and then doing things in a wide west, because it's Web3, it doesn't necessarily make sense. And if you really want to build that capacity and bring the mass on Web3, it should be a combination of Web2 and Web3. Of course, there are new innovative ideas in Web3 that never really happened in Web2. And I hope regulation get into Web3, but not too much. I mean, a bit of regulation is good, because that brings peace of mind for people, that hey, it's a safe environment. Security is another one, right? People want to feel safe, that okay, this is like a safe environment. I can take my money, I can participate in that safely. But again, too much regulation is probably even bad, again, for Web3. There are also other stuff, right? I mean, you look at user experience. I mean, I'm sure asking people in this room, how many of them will probably have a Uniswap kind of Web3 experience? I can bet there is like less handful of people, like less than 10 people probably have tried Uniswap V3. Right? Why? Because it's just like complicated without any reason. Why should it be complicated, right?
Yeah.
Because the people who build Web3 are typically computer scientists or mathematicians. The way they interact or they tend to interact with the internet is not necessarily the way an average user feel like interacting with the internet, right? I think we're going to go through a major revamping of user experience on Web3. And of course, there's so many other tools that need to be built into this ecosystem. Think about the fiat crypto ramp on, ramp off, right? It should be pretty comfortable for people to take their fiat money, bring it into crypto, and send it back to their bank account. Is it happening today? No, of course not. Right? So if you really want to bring crypto and Web3 into the hands of people, you need to make it simple. You need to make sure that they understand what's happening. You need to keep it safe, regulated enough, and then you see over a couple of years, people are going to get on Web3. Of course, in some regions of the world, like LATAM, like Africa, people end up getting into Web3 earlier than other regions of the world because they're forced to. They're really looking for a dollar peg, a stable kind of currency, and crypto provide them with that opportunity. Without that force, that would have not happened, right? But math adoption globally definitely required the Web3 community started to learn from Web2 best practices, regulation getting in a bit, and then the whole user journey started to simplify.
Interesting, and feeds a bit into what Naveed was saying about don't talk about the technology, just make it a seamless experience. Faisal, what's your view in particular also from a strategic point of view for governments on going into crypto relatively early on? Would this lead to a competitive advantage?
So I'm going to answer your question after just taking a different view with regards to the impact of crypto, with regards to companies being relevant or not. I think we'll see a bigger fundamental shift. Wherever we've seen a breakthrough technology, we've seen basically legacy systems break down and be replaced. We've seen this over and over again, and I guess we as humans forget how how fast things can move. When you think about postcards and emails, we all grew up in the era of postcards, but no one uses them today. So I do think that with what's happening with the power of blockchain, we're able to not only transfer data or media, but you're transferring value. This breakthrough technology will kind of change how businesses and people operate, and I do think that people that are not trying to understand the space or participate in it will likely fall behind. That was my viewpoint I also want to share with you. And with regards to governments, so I mean, I've expressed that here in the region we are quite bullish. We've made the decision that we are kind of friendly towards blockchain and that space. And this is a matter of how to get there in a manner that's responsible. The region is working very hard on regulations, on basically the creation of ecosystems, and we're seeing strong signals there. And we see a lot of companies globally come to the region for that reason. And we're betting on being quick and nimble, yeah, that's pretty much it.
Interesting. Benjamin, are companies that don't adopt the crypto economy in one shape or another going to be irrelevant?
Maybe I was going to surprise you to hear that from a crypto platform, but join the crypto economy or become irrelevant. I find this title being a huge exaggeration. The reason why I say that is because I fundamentally believe that it's not a limited window. I think Fardad earlier used the analogy of the internet taking a lot of time. A lot of people compare crypto to internet, etc. But if you think about it, some people joined the internet 5 years ago and they still can get value out of it, right? When you have a look at the number of the World Bank that says that you still have more than 1 billion people that are underbanked or unbanked, look, the opportunity is huge and it's not going to happen over time. And back to my earlier point about the promise of crypto beyond the investment aspect of it, it shows you that we shouldn't even ask this question. It is not a limited opportunity. What is sure though is if you're investing in crypto, if you're looking at the industry to increase your revenue, of course, if you don't join early, you may miss some opportunities. Which opportunities? First, access to greater liquidity. Today, cryptocurrency market gives you access to this in a pretty efficient way. Second, simple increased diversification of your portfolio. When you have a look at different financial assets, crypto represents a new one. So that's how we see it. But I don't think there's any reason to create some sense of urgency here, simply because we have to recognize that crypto answers different needs depending on the user we're talking about and depending on your ultimate objective of what you want to do with crypto. And that's why crypto utility is going to keep on increasing as a means of payment, as a store of wealth, or as an alternative, more liquid investment means. All
right, interesting view. One more question before we go to kind of a final wrap-up question. So in 2018, when we had kind of the first mainstream hype of blockchain, there was this incident where we had a company listed in the US called, I think it was Long Island Iced Tea, and they rebranded to Long Island Blockchain, and then their share price just went up by 10x just because of the rebranding, which was a testament to the hype that we were seeing. Do you see the same thing happening with regard to the metaverse right now? Any views on that?
Well, yes. I mean, every important technological advance has been accompanied by a bubble. They're all like this. The internet was like this. You can go back centuries. There's some great books that you can read on this. Manias, Panics, and Crashes by Charles Kindleberger, for example. So something happens in the world, and people can see that there's the potential for very, very high returns. And money piles in, and some of that money is well spent, but fraudsters, you know, wide boys, they're called in London, you know, just people chasing after money, short term. They come in and there's excess, there's fraud, there are bubbles, and it gets shaken out. But also real things happen, too. And if you go fast, and people will go fast when the opportunities are large. I thought the point that was made earlier that I think crypto is such a serious change for the world. It's going to be happening in 50 years. Blockchain is a very, very powerful technology. And it actually existed before Bitcoin. Those of you who have an IT department, you probably do code version control using something called GitHub. That's based on a blockchain. It was around in the 90s, I believe. This is a big thing, and in a certain sense, there's no rush, but there's also a lot of opportunity if you get in early. I couldn't agree with the point more. But of course, there's a sloppy mess now.
Great.
Just to, on the topic of the relevancy, I think in one form of the other or the other, companies will be using elements of blockchain in future. Mm-hmm. Like in one form or the other, we are all using digital stuff in our, 20 years ago, we didn't use, not everybody in my company had the computer, and now everybody has a computer, maybe an iPad and a smartphone and all of that. So yeah, blockchain technology, I agree, is a powerful tool, and it will seep into the digital lifestyle, digital services, and it's going to come, and it is coming. Now, the topic of metaverse is quite important for us as well as people who, or companies who have actual customers, and we provide retail services to them, and also B2B customers, B2C customers, and we also are experimenting with, right now as we speak, with a space with Microsoft called the Project Republic, and we are seeing how people are interacting with it. We started doing it for the last 2 years almost, and we are also looking into the blockchain part of it. So out of every bubble, I would say, there comes a waterfall. So just like the internet bubble burst, but internet became only better afterwards, right? So out of this, whatever the bubble is, as a company, what we are doing, rather than going with the bubble, what we are doing is collaborating, learning from the previous bubble mistakes, not making massive investments, but actually saying, let's think of use cases, let everybody come in, don't have rules to play, just play and find out what are the possibilities, and then something will come out, and that will be so useful that a waterfall of services that will be relevant for everybody, and we can start using it.
Great.
I think I see metaverse more of a social phenomena than a technological phenomena. I think that's a different way of looking at it. There is nothing really new about metaverse. VR, AR already existed for the past 10, 12 years, right? Instead of cryptocurrency, you could have a virtual point system on top, and you already have metaverse, right? I think the whole emergence of Gen Z and the new generation of people who are more comfortable actually living and interacting in a virtual world, maybe equally in a physical world, I think that opportunity didn't exist 20 years ago, 15 years ago, even 10 years ago. So I think it's more of a social phenomena, and of course it's being pushed by technological advancement and then like tech companies. But at the end of the day, there is always a hype behind this sort of stuff. But I think this time, the acceptance in society, at least the new generation, is definitely higher than that level 10 years ago. So it's going to get somewhere. I mean, where are we going to end up with metaverse? And what aspect of metaverse actually end up realizing value? I think that's a big question. Would metaverse replace the earth and the life we live in? Of course not. I hope not. But to some extent, metaverse is getting into business and life anyway.
Great. If there are no other views, I would just like us to conclude with one glass ball, crystal ball looking question. And maybe just a very quick answer from everyone to this. If we could reconvene at the 7th edition of FII next year, what would have changed looking back in the crypto economy? From an adoption point of view, or exciting projects, or landmark stuff. Benjamin, you want to go first?
Yeah, thank you for the question. Several things. Latest number I saw in terms of crypto users in Saudi was around 3 million users. So if we meet in 1 year, I'd like to hope that it'll be much higher than that. We talk about regulation today. Regulatory framework in Saudi, there's already some progress being done. You know, how much progress will be done? Because Saudi has a role to play as well in the region. I think there were a lot of panels about fintech talking about that, so that's another thing. And the final thing, more crypto panels like this, more discussion, so that it can be even more open in terms of conversation we're having, because today in just 15 minutes we mentioned things like metaverse, crypto, some tokens. It's so many big concepts that are important to, you know, drill down deep in order to make sure you're able to capture the value of this sector. So yeah, I just hope like longer conversations so that the numbers I mentioned, the 195% year-on-year increased volume in Saudi, and MENA representing almost 10% of the global crypto transaction last year. I mean, let's make sure that these numbers are increasing even more.
Okay, great outlook. Faisal.
So I think, I mean, people have been busy during the bear market with building, and I think we could see a few more use cases come up. We're going to see more connect your wallet on websites where people are able to log in and experience some form of service that's backed by blockchain. And I won't repeat the point about regulation, but just to say that I think this will be a driving force in the short term. And we are hopeful that, like I said, that will lead to merchant adoption and more use cases here in the region.
Great. Fardad, what's your view? What's going to happen in the near to come?
I believe the current crypto winter is going to be gone by same time next year. I think we're going to get into another boom. How long the next boom going to take, I don't know, maybe 1 to 1.5 years further. We're definitely going to see more institutions, whether institutional capital, whether TradFi players entering crypto with regulation, and regulatory bodies also getting more involved into the space. To be honest, I would see some industry consolidation happening. I think this crypto winter is going to end up with some of these guys not being around anymore. They become part of history, right? And that would lead to some sort of industry kind of consolidation happening. And I feel there may be some kind of retail adoption also in some regions, like being accelerated further.
Great. Let's look for summer the next time when we come. Naveed.
So, since I don't have a crystal ball, so I can't predict the future. No, I think instead of predicting the future, I am more of a person who wants to shape the future. And from that perspective, 1 year from now, if we meet again, I hope that in the crypto economy, we talk less about the assets or the currencies, and we talk more about the use cases and the services that people are using. And crypto economy or crypto part is, or blockchain part is actually a technological enabling layers. So maybe the techies in one panel is talking about standards and how they are making this standard more stable and things like this, but there are panels which are simply talking about decentral services, decentral apps, and how they are growing and stuff like this. So that would be the one I will be working on, and that will be the one I wish to see more, hopefully in 1 year time.
Great. Douglas, what's your view?
So very quickly, I would say I'd like to see the U.S. straighten out its regulatory lack of clarity. In a sense, from a regulatory standpoint, places like Abu Dhabi, where we have a significant office, are so far ahead of the U.S. The U.S. is not sure what it's going to do. I'd like them to decide. We're going to see more stuff like BlackRock and the Aladdin platform, for sure. I think we're going to see more stuff like that. I think we're going to see NFTs get better integrated into brand management and become more sophisticated and less like novelty items. So those would be my predictions, or
Great.
hopes for the coming year.
Well, that's in summary a great outlook, so let's reconvene in 1 year. So our time is up, unfortunately. Thank you so much for the very interesting discussion.